This is Brad Matheny. This is a follow up video to the Trump tariffs. As I'm watching the news this morning, lots of comments about China raising the tariffs, reciprocal tariffs to the United States. And, as I mentioned to you in my earlier tariff video, I think this kind of a tit for tat move is really destructive. But, you know, in the long run, it'll play itself out. And I think what will happen is everyone will realize that when China gets to 200% tariffs on U.S. goods and the U.S. is at 160% or 120% tariffs on Chinese goods, people will figure out that, the answer is to negotiate something suitable, and how this is going to play out is short-term pain, long-term effectiveness for the for the globe. Now, I've shown you a couple things. We're going to watch the markets as we go here. This is weekly, and this is my tariff chart. But, I need you to understand that we're moving into this consolidation phase. Very, very heavy volume. I mean, massive, just a massive volume right here. I got a little line there I want to get rid of. I'll have to drag this over. See if I can get to it. No, I have to come down here to daily or hourly. Try to find it. No, I don't see it. Maybe it's this. Okay, go back to weekly. And I don't see it. Something down here. Nope, that's a bar. Okay, go back to weekly. And so let's talk about this, okay? Just so you know, the trade imbalance, Congress is coming out and they're trying to assert control over the president's tariff ability, indicating that they should be the ones that provide tariffs. I really think, given what's gone on over the last couple of years, and Congress is, when I say couple of years, I'm talking 30, 40 years, and Congress is really inability to do much anything. I want you to take a look at this, okay? This is called the fiscaldata.gov by the Treasury Department, fiscaldata.treasury.gov. So it's by the Treasury Department. U.S. deficits compared to revenue spending in 2024. Okay, this was our revenue, 4.92 trillion. This was our deficit, 1.83 trillion in 2024. Remember, that was Biden's last year in office. I'm not picking on anybody, Biden, Trump, Obama, whatever. You're all entitled to your own opinion. But I'm going to tell you that you need to understand why Trump is making this move. In fiscal 2024 fiscal year, the total government spending was 6.7 trillion. Total revenues were 4.9 trillion, resulting in a deficit of $1.83 trillion, an increase of 138 billion from the previous year. So we're basically dumping $1.8 trillion a year on the credit card, on the backs of American taxpayers and foreign global markets, and we're basically making 5 trillion. So you do the math, okay? We're basically dumping 40% of our total revenue. Imagine if you were an individual, you're making $100,000 a year, but you couldn't afford your lifestyle. So you put $40,000 extra or $45,000 extra a year on credit cards, saying, well, I can't afford it, and I don't know what to do. So I'm just going to dump it out on a credit card and have to pay interest on it. That's the way the U.S. has been. And you can see that we're increasing our deficit spending. We're moving into a growth period with deficit spending that's really ungodly. Okay, so here's fiscal year 2020, 2021, 2022, 2023, and 2024. Okay, we are literally spending, you know the term, out your ASS, okay, we're spending out our bum, and there is nothing that the politicians in DC are doing to try to prevent or stop anything. Yeah, I mean, you could look at this and go, well, 2000 was the crash, and then we kind of came out of this. Yeah, but look at the spending. The spending is now up to five times what we were. Now, granted, this was COVID, I understand, and it's coming down, but it's still 3.5, 400% higher than where we were back here in 2005, 2006. This is the dot com crisis. This is the global financial crisis. This is COVID. I mean, come on, guys. No matter how you look at it, we're spending out our ASS. And there is no way the United States can continue to operate like this. And there is nothing that Congress or the House or anybody has done about this. The Democrats used to be about, balancing and managing and some level of fiscal responsibility, but they're not. And now you can come in here and you can argue that the Republicans used to be about fiscal responsibility, but they're not. There's only a handful of people in our government in U.S. that are actually talking about this in a reality format, which is that another 5, 6, 7 years like this, unless we see tremendous GDP growth, I'm talking 30% a year, we're going to be bankrupt. Our spending is going to be, up here in the $3 to $5 trillion a year range, just trying to pay our debt that we've buckled up right over here. It all started pretty much right over here, 2010, 11, 12, 13, 14. Now, granted, it weakened back down here, but we've made no efforts to try to address this deficit spending. Congress and everybody else has been basically in a giveaway mode. Oh, we're going to do this, we're going to do that, we're going to do that. Aren't you happy? We're giving you something extra. You know what I'd rather they give me? Relief from this deficit mode and give me the opportunity to work and earn without getting taxed to death. I live in California. They're talking about taxing traveling by mile out here. I mean, the problem with these giveaways is that, you give it away for something, but you have to get it from somewhere to give it away. You've got to take it somehow from someone in order to turn around and give it to some other cause or policy or whatever that you think is important. So, and again, this is the result of taking to give it away. And that's, I think, what Trump is trying to do. Trump is trying to eliminate this issue. Deficit spending is essentially the difference between national debt, national deficit, and national debt. In terms of deficit and debt are frequently used when discussing the nation's finances and are often confused with one another. To pay for the deficit, the federal government borrows money by selling treasury bonds, bills, and other securities. The national debt is the accumulation of this borrowing along with associated interest owed to the investors who purchase these securities. As the federal government experiences reoccurring deficits, which are common, the national debt grows. To learn more about the national debt, visit the National Debt Explainer. Visualization below shows how deficits from previous years are added to the current year total debt. So previous years add up this year's debt, total debt, boom, it adds up. Now you've got 100, 175, and 150. Total that up real quick, puts you to 425. And again, it's pretty simple to look at this and say that, we went into massive spending 2021, 2020, 2022, 2023, 2024. We've got into massive spending. Just blow your socks off. It was a party. And that's why the markets went up so much, guys, is it was a party. Money was flush. It was almost like a 1970s, early 80s, crazy party. Everyone had Coke. Everybody had a great time. Everybody got drunk. Nobody worried about anything until the bill came due. And then all of a sudden it was like, whoa, what do we do? So, long and short of it, what we've got to realize is that we need to structure and restructure our process efficiently to move through this cycle phase. And this cycle phase is going to be somewhat painful, okay? But as I showed you, we cannot have continued ongoing deficit spending in the US. The US is the leading economy on the planet. Many other countries depend on the US economy. We're not talking about, changing the deficits in a way that we're going to turn the tides. Oh, China, you've been charging us 67% on all of our products, and we have free imports on Chinese products into the US. We're not trying to flip it and say, hey, China, we're going to charge you 67% and you need to have free imports of US products into China, thus flooding the Chinese market with US goods and services, and essentially charging them to import their products. That would be flipping the script, so to say. We're just talking about having something that's more fair. And I think that's where the pain is going to hit, because I think a lot of these economies are simply unable to operate efficiently throughout the pain. They have no idea how to operate efficiently with their debt load, with their economies operating without the bonus of having an exclusive kind of an agreement where they suck off the U.S. in some way, shape, or form. And that's really what this is. It's essentially like an economic stimulus for these countries. If China charges 67% on U.S. products but can ship into the U.S. for next to nothing, they're protecting their economy. They're selling us, say, $1.3 trillion worth of stuff, where we're shipping only $600 billion worth of stuff to them. Hypothetically, guess what? We end up coughing up $650 billion or so into the Chinese economy every year as a form of an economic stimulus. And that, ladies and gentlemen, is not going to fly any longer. Okay, so where we're at with this is the nations, global nations, hopefully they watch my video, are going to struggle. But now look at where we're at. We're trying to make some changes. So you come over here and, let's just do this. Let's come back here, go to monthly, and I'm going to ask you something real quick. What's going to change? What's going to change? Okay. So if we had a hypothetical, let's use China. China had a 67% roughly tariff on U.S. goods. U.S. had, I don't know what it was before, but I'm assuming, let's call it a very small 5% tariff maybe on Chinese goods. Okay, so look at that ratio. Hypothetically, even if it was 0 or 1 or 10, that's basically a 600 to 1200% ratio. It's 6 to 1 or 12 to 1 ratio in terms of structure of the debt, okay, of actual trade, not debt, but trade. And it resulted in probably a $600 billion a year deficit for the U.S. That is not going to fly. But now look at where we're at with Trump's tariffs. Before the new reciprocal tariffs today, I don't know exactly the numbers, so I'm going to stick with the other numbers. So the U.S., China had a 65%, 67% tariff on U.S. goods. The U.S. raised 67, raised the tariff. U.S. raised the tariff to, I think it was 35% tariff on Chinese goods. Okay, that's a 2 to 1 ratio. Do you guys understand the difference between a 6 to 1 and 12 to 1 ratio compared to a 2 to 1 ratio? Okay, it's massive. that $600 billion deficit on a 12-to-1 or 6-to-1 ratio goes down to, theoretically, 50 billion to 100 billion total deficit for the US. Trump has managed to cut, by doing this, 600 billion or 500 billion off of our debt load every year by doing this. China's not going to like it because they want their 600 billion bonus every year. Sure, who doesn't want somebody handing them 600 billion US dollars every year through these trade deficits? But you need to understand that this is not going to work. This is going to just bankrupt the United States. It'll destroy the middle class. It'll destroy opportunity. Yeah, it'll look like we're making a bunch of money until all of a sudden you realize that we're Zimbabwe or Germany, where it costs, a million Reichmark to buy a roll of toilet paper. And that's what Trump is trying to fix. So, painful as it might be, and as concerned as you might be about this, Congress has done nothing. The House has done nothing. The presidents have done nothing. Previous presidents that I'm aware of, nothing this aggressive. There is nothing that has been done. They can yell and scream about tariffs now, but remember, they went along with all this crazy spending. They went along with all this deficit. They went along with everything. So now you're going to look back and you can look at, and I'll call them out on both sides. Republican, Democrat, Independent, doesn't matter. I'm going to call you guys out. There's only really a handful of people that have been standing up in the U.S. government and throughout the world and saying, hey, we cannot do this. We are going to, Rand Paul did it. Others have done it. I'm just pulling on names. The old days, Ross Perot did it, came up and said, this is bullshit, pardon my language, bullcrap. It doesn't work this way. We're going to go broke. And this is going to destroy the global market, because once everything gets destroyed, guess what? We're going to end up fighting. We're going to end up in world wars. And it's because instead of having free trade, we've got U.S. subsidized trade. That's what's happening. Essentially, all the workers in America are subsidizing global economies. So think about it. Your kids are going to school and working, you're working, and our government is sending off hundreds of trillions of dollars every year off to global economies. Look, here you go. Off to global economies. How much? Well, right here, not hundreds of trillions, but trillions. We're looking at 1.83 trillion per year. Okay, that's massive. Look at this number up here. What's the national deficit? Boom. Look at that number. Fiscal year to date. I have trouble. There's hundreds of thousands, there's millions, there's billions, and now there's 1,146,000,000. That's the total deficit, okay, of fiscal year to date since 2024, October 2024. So that's the current fiscal year deficit. Trump's been in office for what, 30, 60 days? We were already $1.146 trillion in deficit. Okay, so now let's have some fun. Pull up a calculator. So far, our glorious government leaders, the people that we keep electing to go into government, have turned around 1.146. Let me just do it this way: 1.146. 000, because that's trillion, divide by 350 million U.S. citizens, comes down to they've thrown the U.S. government $3,200 in deficit. Remember, that's not debt. That's deficit. That's just more money they've spent than they've taken in. Okay? Now, as a result, and we have to go to October of this next year, if I believe. Let me see what it says here again. Year to date since October, total monthly updated, blah, blah, blah. National deficit for last year was $828 billion for 2023 to February 2024. Doesn't make any sense because that's not a full year. But whatever, you know. So again, it basically boils down to they're spending, if you figure it out, $300 extra a month that they're not taking in for every man, woman, and person in the United States. Okay, not counting, whether you're a citizen or not. It's just every person in the United States that's alive. Almost $3,200 in a fiscal year spending. So break it down to $300 a month. They're blowing out the door because they're not managing our spending versus our income. And that's the point I'm trying to tell you. So what's going to happen here, as I'm down in the last 2 minutes, is whether you like it or not, the pain of restructuring global debt back into a more reasonable structure, 2 to 1, 1.5 to 1, whatever it is, however we've got to get there, whatever the pain that is required short term. And remember, here's the pain, guys. Let's talk about how much pain we've had. Really? Okay. Markets are down 18%. Oh my God, the pain. Oh my God. I mean, it's a crash. Where's everybody talking about a crash? Oh, wait a minute. Wait back, what over here? Remember we were talking about this back in 2021 when the Fed moved the interest rates? Oh yeah, it's down 26, 27%. Wow, that's, an extra 9% more than where we're at right now. But and people didn't like it. Oh my gosh, COVID. Remember COVID? It was a total collapse in the market. Yeah, it was. Markets were down 35%. But we're only down what now? 18.1%. That's half of this. Okay, let's come back over here. Remember when the Fed started to first raise, or second time they started raising interest rates? We had this big breakdown. 21%. Wow, do you remember that? Yeah, that was in 2011. And we rolled right out of it and continued going. You remember the global financial crisis back over here? What happened? Well, from the highs, if I can get my mouse to cooperate, to the lows. Wow, 60% almost, 58%. That's pretty bad, but we rolled right out of it by spending our way out of it. Now, if we can hold up above this low, this COVID low, I'm going to tell you that we're going to be just fine and it's going to work itself out. But we have to work itself out. We have to work this out in a reasonable manner in order to provide long-term economic stability for the globe. So as painful as it is, we're going to have to deal with it. Okay, guys, talk to you later.